This is Golden Years, a roadmap to navigate retirement with Mark Cordner, the podcast.
You know, these past few years here, we've talked a lot about the Magnificent Seven, if you're familiar with them. I mean, they really are the 7 tech stocks that have held up the stock market. I'm talking about the big names like Amazon, Apple, Meta, even Tesla's out there with Microsoft. Bloomberg now says that the Mag 7 are now just the average 7 as far as dominance and performance. But the cost of owning them is still really high. So, Mark, what is your advice about owning these stocks? And I guess, is there enough upside to justify that cost?
I should probably back up a step and just say that I'm not a big proponent of investing in individual stocks. I mean, I think that everyone should be involved in the market to some degree, but I believe in what are called structured investments. I don't believe in the guessing games that most people get involved with. So if we want to invest in individual stocks, I say power to you. You know, let's earmark a portion of your portfolio perhaps to do that, but let's look at it for what it is. It's a form of gambling, and there's nothing wrong with gambling as long as we recognize what we're doing. What we believe in, though, as retirement planners is what we call structured investments. And this is a fundamentally different approach to investing in the market, and it involves the work of 3 different Nobel Prize winners, economists that taught us about modern portfolio theory and how really we need to invest in all known asset classes. Because truly God alone knows where the next hot spot is in the market. Most people engage in self-defeating behaviors where they're trying to time the market, trying to guess which sector is going to be hot. And this is very commonly done when people do individual holdings. I remember, for example, an individual came in off this radio show, actually, who had almost 95% of his holdings was in Tesla. And this was back in December. And he came in because he really wanted to create an income plan, and we showed him how to do that, how to eliminate any kind of questions as to future financial security. And at the end of the day, he didn't act because he really wanted to just hang on there just a little bit longer because he thought it's going to keep rising, you know, with Elon Musk getting so much press and yada, yada. Well, Tesla got spanked this last month, and so did he to a pretty heavy degree. And so, again, our idea with structured investing is we own all known asset classes, and therefore we take all the gains that are taking place in the market, but also all the losses that are taking place. And as a net result of that, what we realize are the market's natural returns. So cue in on that, the market's natural returns. We're not trying to beat the market. We're trying to realize the market's natural returns. So we don't have to sit here and play these mental games that Wall Street would have us play, because truly Wall Street wants us trading in individual stocks and trading, because every time we make a trade, we're generating fees for Wall Street. And that is another self-destructive behavior. So we believe in structured investing and combining that with principal protected accounts. Sometimes that involves annuities that we've talked about here in class. That's not the only way of doing principal protected accounts. So we've talked a lot on the show about my belief in what's called a 2-pocket strategy. At least that's what I call it. And that's the idea that some of our money needs to be invested in the market long term. Some of it needs to be out of the market in principal protected accounts. And I can absolutely assure you, clients who have done that with us have been very, very grateful during the market downturns. And so if these ideas are foreign to our listeners, I would say just, schedule a time to visit. We can teach you about this and how you can get consistent returns without all the stress that comes with trying to follow all of Wall Street's advertisements and, their hot news. I'm not the guy who's going to call you up with the hot tip. That's just not who we are. We don't believe in that. Best role of an advisor is to save you from the $50,000 error, not to get you just a slightly better return because of some sexy tip that they got, hot tip in the market.
A lot of folks are probably listening to the show going, you know what, I have been worried about maybe my 401k or my investments or, what is my risk tolerance? How is this hurting or helping me? I want to come in and sit down with Mark one-on-one, but I don't want to be sold all these things. I don't want it to be a big production. Oh my gosh. What's that first appointment like?
Wow, it's a lot of listening, a lot of questions, and a lot of time on the whiteboard. What I like to do is understand what the person's objectives are and what their experience is. And then within that understanding, we're then able to introduce, educational principles that will help them feel more confident. And we put everything up on a whiteboard. And so we have a model we use that helps people visualize where they're at and what their strengths and weaknesses are in their current plan, what maybe some opportunities are to improve things. So from that, we're able to build out a roadmap. at the very least, people leave that first appointment where they have a lot more confidence than when they came in, and they absolutely know that there's steps they can take to take control. Again, it's the law of the harvest, as you were kind of referencing there earlier. We reap what we sow in life, and so to the degree people are willing to open up and share what they have done to prepare for retirement and what they're willing to do to make their future better, then we can absolutely help them create a plan.
Now, here's the deal, Mark. I wouldn't be doing my job if we didn't talk about the new president, of course, President Trump. I know, listen, he's literally gracing every headline, every social media. Everything you see and hear is either Elon or Trump. A lot of people wondering, where are we going? What's going to happen? What's he going to do today? Well, we also know he's really kind of threatened a lot with this whole tariff conversation. That's been a big concern for folks. He's used it more so in the thought of a negotiating tool recently, but will he use them to wage a trade war that could result in more inflation? Here's Morningstar economist Preston Caldwell.
My baseline assumption is that we don't see large tariffs implemented and maintained indefinitely. They could be implemented for, thinking about the 25% tariffs on Canada and Mexico or the 10% across the board tariff. That could be something that, comes and goes in a week. But is it going to be maintained for years on end and sustain a large prolonged increase in inflation? That I'm more skeptical about.
Okay. Well, I mean, I think we all have a little skepticism going on right now, but, we can't control what the government does. Doesn't matter how much money you have. You can't control it, right? So what can we control about our retirement savings, Mark, when it comes to inflation?
Well, inflation is one key issue, but I think a bigger picture there, and I'll address that, but one of the bigger pictures, I think, is, when we're talking about these current headlines, the truth is we can't control that at all. But what we can control is our long-term behavior. We have to know and just accept that there will be recessions, there will be spikes upwards in the market. There's going to be all sorts of impacts on the market that we cannot foresee. Truly, God alone knows what's coming there. And so should we plan on inflation generally? Absolutely. That needs to be part of our long-term plan. We need to have money in the market to help offset that. Perhaps we need to have some rental properties in there that, it's a great inflation buffer. So there's things we can do, but the biggest issues, I think, is that long-term approach. We don't act based upon today's headline. Trump hiccuped yesterday, therefore this is happening today. They're trying to I'm saying hiccup politely here, but they're trying to link things that aren't necessarily causally related. One does not cause the other per se. One of the best things we can do is just turn off the financial media and just ignore that, because long term, what we control is, again, that law of the harvest. We can sow our seeds and we can nurture the crop, as it were, so that one day we can have the harvest that we anticipate. And what that means is disciplining ourselves to save on a regular basis for the future. It means thinking about what we're going to do with that ultimate crop, how we're going to harvest it, and how we're going to deploy it into the market. In this case, as we earn money, for example, in the market, how are we going to convert that into vehicles that can create income we can't outlive? The biggest concern for retirees is not getting the sexiest returns. It's being assured that they're not going to run out of money. And for that, we typically look to the insurance world, because that's where we get the guarantees that we want, that we don't get in the market. And so things we can control, again, are our long-term thinking, that we're not looking for today's headlines. We're thinking in terms of years and decades, not in terms of days and weeks. And we structure a portfolio that will withstand whatever hiccups may come in the market, Trump aside. I mean, he's obviously creating a lot of dust right now. This has been a whirlwind of a year. Every morning it's kind of fascinating to go to the headlines, but more as a curiosity, I would say. There's big changes coming. And again, it's not things we can control. What we can control is our own behavior. And that is, are we living on less than we earn? And that's a big deal during the working years. Right. And are we living on less than we earn in our retirement as well? I mean, that's a core principle. So what I'm trying to get across here is there's core principles that hold regardless of what's happening in the world around us. Those things we can control. So we ought to be looking for tax advantages. We ought to be looking for risk management tools for things like future healthcare costs that need to be protected against. There's a variety of long-term thinking and planning tools that we need to implement, and we're here to help.
Let me ask you this, though. I mean, you're talking about, of course, things we can't control. Things are out of our control. The tariffs, taxes, inflation, you name it, right? Which direction the stock market's going to go into. And really all people care about at the end of the day is two things. Am I going to be okay? am I going to run out of money? And that is really the main, if you can answer those questions, half of the anxiety just leaves the room there. So is there a tool or strategy that you use that says, hey, no matter what's going on with inflation or what's going on with taxes, you're going to have enough money to last for as long as you need it to? Because again, at the end of the day, I think that's what folks are concerned about.
There's a number of tools and strategies. I mean, the most obvious one for people in the planning world is the recognition that annuities are a unique animal. I mean, they're a unique vehicle. It's the one thing in the world that's been around for 2,000 years. I mean, we have hundreds of years of precedent here of income being created that people can't outlive. So I can repeat that. It's basically a private pension. It's income, typically monthly income, that comes to you as long as you're breathing. And it can come to you and your spouse. It can be structured that way. So we all know that employers used to offer pensions, but very few do nowadays unless you work for the government. But that doesn't mean that you can't have a pension equivalent, because that's functionally what an annuity does for people, is it creates income that they can't outlive. And so as we shift into the kind of going down the mountain, we spend our working years going up the mountain. There's not a lot of risk there. I mean, there is, but there's not long term. Where the fatalities occur is on the descent. It's on the downward side of the mountain. And that's really what retirement is about, is how do we take a finite amount of money and make it last over an undetermined period of time? I mean, who knows how long we're going to live? And annuities are a wonderful product for that. It's not the only tool that a person should have. It's not the right answer for everyone, but it is the right answer for far more Americans than recognize that.
I want to continue with this conversation with President Trump because, again, man, he has been busy with that pen and all these ideas. One of them, of course, is to eliminate taxes on Social Security for seniors. And while that sounds great, it also leaves some questions here. First of all, who really would enjoy this break? With Social Security already on a possible path to insolvency in the next 10 years, could this plan move up those projected cuts and benefits? Lots to discuss here, Mark. What are your thoughts?
Well, absolutely. I'm concerned about it. I mean, certainly it's a great sales line that, we're going to be able to avoid taxes. I don't know that we can do that with the Social Security problems that we're now facing, because everybody knows that the program is in jeopardy of going bankrupt. We have more people claiming than we do have paying into the system now. And we've all been told, we've heard it all over the place, the benefits are going to have to reduce approximately 25% here within the next 10 years unless changes are made. Now, do I panic about that? No, I don't, because we have history on our side. In 1983, we recall how Ronald Reagan and Tip O'Neill came together for that great compromise. That was the last time when there was this great fear about Social Security having to cut benefits. And what they did at that time was they prolonged the full retirement age of when people could get their full benefits. It went from 65 to incrementally 66 and to 67 now. They also introduced taxation of Social Security benefits, and they can do those things again. They can increase the taxes. They can postpone benefits to a later age, which really makes a lot of sense if we kind of index it to life expectancy. When Social Security was first introduced, it was anticipated it would pay out for only 2 to 3 years, and there were 40 workers funding the program for every retiree. Now we have less than 3 workers funding the program for every retiree, and people are hoping to have benefits for 20, 30 years. And so for him to say that it's going to be completely tax-free, I think is maybe wishful thinking. I'm not sure that the math supports that, but there are things people can do regardless if it's tax-free or taxed. And that is, we need to prepare for the problems that are likely going to come. And then if those problems don't come, we're okay. But if they do come, we're still okay. But we got to recognize if those benefits are totally tax-free, that money is going to have to come from somewhere. We've got massive federal deficits. The unfunded liabilities, the promises for Social Security and Medicare are, they're over 120 trillion, where the federal debt is like 36 trillion, that deficit. So the actual cost of these programs is far more than most Americans realize. So I don't see it becoming tax-free. It sure sounds great. All of us would love to avoid taxes. I would say the better thing for us to do is not think of pushing problems onto our grandchildren, but instead maybe living on less ourselves and preparing to have financial vehicles and instruments in place that will help us. If these ideas are foreign to people, I'd say come visit with us again. We'd love to help you protect yourself from whatever is going to come. If that's government cuts, if that's increased taxes, if it's benefit cuts or increased taxes, we can help you prepare for those things. But it's going to take some action on the part of each of us. Pre-retirees should be visiting with financial advisors, and we're certainly making ourselves available to help with that.
Investment advisory services offered through Golden Years Financial LLC, a registered investment advisory firm. Insurance is offered through Golden Years Insurance Services. These firms do not provide legal or tax advice. Consult your own legal and tax advisors before taking actions that may have tax implications. Investing in securities involves risk, including the potential loss of principal. Insurance contracts' principal protection is based on the claim-paying ability of the respective insurer. None of the information contained on this website shall constitute an offer to sell or solicit to buy a security or insurance product. The information and opinions contained on this site or requested from this site are provided by third parties believed to be reliable, but accuracy and completeness cannot be guaranteed. They are provided for informational purposes only and are not a solicitation to buy or sell any of the products mentioned. Any media logos and or trademarks contained herein are the property of their respective owners, and no endorsement by those owners of Mark Cordner, Golden Years Financial, or Golden Years Insurance is stated or implied.